investing in a safer climate. And I like to give this presentation a subtitle of using your investment power to fight climate change, because I think that subtitle really recognises the power that we all have to shift major financial institutions. So not just to take action in our own right, but to shift, to catalyse a major shift from big institutions that dominate our economy. So my name is Will Vanderpoel. I'm the Asset Management Campaigner at Market Forces. I'll explain a little bit about what that title actually means later. But to explain what Market Forces is, we are an affiliate project of Friends of the Earth Australia. We're a small not-for-profit environmental organisation. We started 7 years ago with a vision of a future where the community holds to account the institutions that have custody of our money, and we work to ensure that that money is used to protect and not damage our natural environment. So we work with community members and community groups to prevent investment in projects that harm the environment and drive global warming. We do this by providing information and tools so that everyone can use their power as a bank customer, a super fund member, a shareholder, those sort of consumer or community connections that we all have to hold institutions to account over the environmental impacts of their lending and investment activities. I do need to start with a disclaimer that the content of this presentation does not constitute financial advice. The information is presented in order to inform everyone who is motivated by environmental concerns to take action based on those concerns. This information does not account for any individual's personal objectives, financial situation or needs. It should not be used, relied upon or treated as a substitute for specific professional advice. Individuals should obtain independent professional advice before making any decision relating to their particular requirements or circumstances. Sorry for all that. It's just something that we need to do to make clear the fact that this is just a presentation about using your power and the power of your money for environmental ends. It's not a presentation to influence your own financial decision making in any way. As I've said, Market Forces seeks to address major environmental issues like climate change by empowering and informing community action to hold the institutions that have custody of our money to account. The way that we do that is by presenting and collecting research where we connect financial data with outcomes. So, for example, we will capture the lending activity of banks and make that information public so that people can see what their bank is lending to and what their super fund is investing in. That information makes people more powerful and gives them the opportunity to engage constructively with financial institutions and also to make informed decisions about where they want to be investing their own money. And then we collaborate and use those community connections to build power, and we facilitate community action that puts pressure on those financial institutions to start aligning our money with our values. Our campaign areas they've started small and they're growing quite rapidly. So the most obvious, I think, area that we work on Market Forces is the banking sector. So particularly focus on the big four Australian banks and their lending to fossil fuel projects. We also have a big superannuation campaign, which is mostly my work. He's working to encourage Australian super funds to divest from fossil fuel companies and work with other companies to encourage more sustainable practices. This work also covers insurers who obviously are increasingly paying out on climate change impacts, while on the other hand are investing in the fossil fuel companies that are driving runaway climate change. Another area of our work is shareholder action, and this really leads to increasing corporate governance and ensuring that companies that are owned by shareholders are managing climate change risks on behalf of those shareholders. And that ties in neatly with our super funds work, because obviously super funds are shareholders in these companies as well. So where we're able to raise issues with companies around their climate risk management through individual shareholders and people's sort of retail shareholdings, we're then also able to engage with super funds as big investors and encourage them to push companies to do better. We're also increasing our presence overseas at the moment. So I've got up there an image of a report that we put out last year, which captures lending from international banks and financial institutions to international projects as well. So this hasn't historically been Market Forces' focus, but as we've seen, the pipeline of new fossil fuel projects is really quite concentrated in Southeast Asia at the moment, and being such a close neighbour to that region, I think it's and having campaigns that have worked here in Australia, I think it's our responsibility to take that campaigning model overseas and try and replicate some of the success that we've had and share the knowledge that we've built over the last few years. And by success, I guess it's an important point in the presentation to, I guess, keep you all interested, because I'm about to get into some really detailed, I don't know, for some people it might be boring. I find it quite interesting data as to, what different financial institutions are doing with our money. But at this point, it's important to point out that this model of, sharing information and to build community pressure is actually working. The progress that we'd like to see is never as fast as we need it to be. But we have seen major financial institutions shift, particularly on thermal coal. So that's coal for generating energy. We've seen Commonwealth Bank in the middle of last year set in place a policy to withdraw all finance from the coal power sector by 2030. Westpac just recently matched that commitment. And QBE, along with another couple of insurers, have made similar commitments as well. And what does that mean? I mean, getting a policy out of a bank to restrict finance in 10 years' time, it might sound a little intangible, but what we're really talking about is projects like a new coal mine will find it much more difficult to attract the finance it needs to get off the ground. And other projects that we need to transition away from now have a clear indication from the finance industry as to what their future is. And what that means is, we can work now to support communities and workers that are relying on current fossil fuel assets that we need to transition away from, and ensure that they are well placed to not be left behind by that transition. So that's where our campaigning and advocacy works to ensure that emissions come down over time and that communities are supported throughout that transition. I want to start with our most recognisable campaign, and that is, as I said, the banks campaign. We know that Australia's big four banks are involved in about 3/4 of all financing deals for new fossil fuel projects in Australia. So any new coal mine, gas pipeline, power station, whatever, that gets financed in Australia, 3/4 of them will have involvement from the big four Australian banks. So that's really where Market Forces started its research campaigning model 7 years ago, was drawing links between customers of the big four banks and what those banks were doing with our money when it had left our pockets and was sitting in our account. So on the Market Forces website at marketforces.org.au/banks, we keep a running tally, I guess, of banks that have committed to not finance fossil fuels and banks that are financing fossil fuels and how much they've loaned over the time that we've been tracking that lending. Again, it's the same model of, starting with research, sharing the information, and facilitating community action. Like, in the past we've run big divestment days where customers of the big four banks have decided to leave the banks and have decided to do it all on the same day, and we've facilitated actions where in different cities around Australia those customers will turn up to bank branches and publicly close their accounts. And it's that sort of action that I think really has had a major impact on the financial institutions that are the target of these campaigns. Then there's My Baby, the superannuation campaign. So a lot of my role involves applying that same campaigning model to the superannuation sector. We all have superannuation. Every working Australian has superannuation, whether it's a self-managed fund or with a super fund. And I guess it's one of, if not the biggest investment that we'll make in our lifetimes. So it's really important to know how our super is being invested when it, gets cut out of our pay packet and goes off to a super fund or gets invested through a self-managed super fund. It's really important to know what those investments are doing. And super is a major financial industry. It's worth $3 trillion, and superannuation funds own about a third of the Australian share market, and that's on track to grow to 2/3 by 2040. So that gives our super funds a huge amount of power when it comes to directing the way that we want our economy to transition to one that is consistent with a low carbon future. Whether that's working with the companies they own to transition them to low carbon business models, or whether it's deciding that certain companies can't be part of that transition and won't be part of that transition and therefore need to be excluded from investment opportunities. So Market Forces has done quite a lot of research into what those companies are, the ones that can and will transition to a low carbon business model, and those that can't and have sort of declared their hand and that they won't help us get to the low carbon future that we need to see. That research is captured in a recent report. We've released our Out of Line, Out of Time report in March of the last 2 years. So the most recent one in March 2020 basically looks at the 300 largest companies on the Australian share market and assesses whether they are aligned with the climate goals of the Paris Agreement, whether their business strategy is aligned with the Paris climate goals. And what that research has shown is that there is a very small section, a small subsection, I guess, of the Australian economy that we've deemed to be out of line, out of time. They are the companies that are undermining the Paris climate goals by expanding the scale of the fossil fuel sector or relying on scenarios that would see well above 2 degrees of warming. And so when they talk about their future prospects as a company, they're saying, well, we expect fossil fuel demand to grow in this manner because of this projection. But if you take that projection out, it actually is, referring to something like a 4-degree warming pathway, which is just, there is no economy at a 4-degree warming pathway. So these are the sort of companies that fall into the 8% that are out of line and out of time, and that we encourage super funds to divest from immediately. They're the ones that have declared their hand. They're not going to be part of the low carbon transition. And in fact, they're actively holding us back. Some of the examples of these companies that I can give that you may know, Whitehaven Coal, who are famous or perhaps infamous for its Maules Creek coal mine in New South Wales. There was a strong and sustained community campaign against that coal mine. back in 2013, mostly, and that's a company that's still planning to expand its coal production. I think their expansion plans are slightly on the back burner for now in the post-COVID slowdown. We're seeing a lot of companies put fossil fuel expansion projects, delay those decisions, I guess, but they're still on the cards, and they're still companies that have no other sort of future prospects other than to exploit those fossil fuel reserves. So other examples would be New Hope, another coal company operating mostly in Queensland. And then the big oil and gas players like Santos and Woodside and Oil Search are all targeting major fossil fuel expansion projects over the next 5 to 10 years. So what we've done is we've found all those out-of-line, out-of-time companies and the ones that are the other companies that fit into various other categories of Paris alignment or otherwise. And then we've tracked as much as possible where super funds are investing in each of those categories of companies. Now, there isn't a great deal of disclosure from super funds across the board in terms of what they are investing in. But as much as that information is available, Market Forces has captured it at marketforces.org.au/superfunds. And that from that page, you can look into more detail at your own super fund and compare it to what other super funds are doing. And also contact your fund about its fossil fuel investments or its approach to climate change more generally. And so that's about facilitating that conversation, I guess, between you as a super fund member and the institution that has custody of your money. We have another couple of metrics in that table, and I think a really important one to point out is the fossil fuel exclusions column. So basically, we are looking to see super funds set exclusion policies that would ensure that they no longer invest in the out-of-line, out-of-time companies and any company that is pursuing a fossil fuel expansion project. There are few and far between super funds that have instituted policies like that, so we continue to campaign to push those funds to get more comprehensive fossil fuel exclusions in that category. So what we encourage, like with the bank's campaign, but particularly on super, that we like to point out that as a super fund member, you do have a lot of power. You can contact your fund to demand they improve their investment policies and climate risk strategy, or you can decide to switch to an option that better suits your values. Some super funds are offering sustainable or ethical investment options, although these do need some scrutiny as to whether they live up to what they say on the packet. A few of them we have seen claim to be sustainable or ethical, but are still investing in companies that would never meet that definition. And then, of course, the next level of action that Market Forces works to coordinate, I guess, is connecting like-minded people and groups to spread the information and tools that they need to influence the financial institutions that they are connected to. So in this case, super funds. And any decision that you may make with respect to super fund or any financial institution that you choose to or not to do business with, make that decision as public as possible, because that's the real power of personal action, is to encourage, to demonstrate that it can be done and encourage others to follow suit. And Market Forces can always help with helping to make your decision as public as possible. So that's about the companies that we encourage divestment from them. We don't want to see any investment in, but there is a large proportion of companies that don't fall into that group. And what we really want to see on those companies is investors to, I guess, work with the companies to demand that they transition and bring down their emissions or climate impacts in a way that is consistent with a Paris-aligned low-carbon future. So, super funds might think that if they've ditched fossil fuels and people from the ditching fossil fuels from their own investment portfolio, the job might be done. But we can all help to push companies to do better. And this isn't just the fossil fuel companies, this is any company. So for example, Coles or Woolworths, who are major energy users and are not actively undermining the shift to a low carbon economy, but really need to be driving renewable energy projects so that their own operations aren't driving us towards runaway climate change. So the way that market forces helps to, I guess, foster action in this regard is kind of a dual approach between our shareholder action work and our super funds work. And I alluded to this a little bit earlier, but what we like to do is work with individual shareholders to help them raise issues around climate change and a company's environmental impacts with the company, generally through their annual general meeting process. So where shareholders have the right to attend annual general meetings of companies, they can go along or send a proxy on their behalf to raise these issues directly with the boards of companies. And sometimes we band together with over 100 individual shareholders to lodge a formal proposal, a shareholder resolution with a company, which then goes on the agenda of their annual general meeting and forces all of their investors, including major investors like our super funds, to vote on the issue that has been raised. So, for example, Market Forces has lodged shareholder resolutions with, I think, 3 of the big 4 banks last year. And this year so far, we've had 2 shareholder resolutions lodged. One was with Rio Tinto and another with QBE, a major insurer. The resolution we lodged along with 100 shareholders at Rio Tinto was asking the company to set emission reduction targets which extended to the end use of its products. So Rio, as an iron ore miner, sells its iron ore to the steelmaking industry. The steelmaking industry is a really high emissions intensive industry. And so raising these issues through a formal shareholder proposal forces all shareholders, including super funds and big investors, to consider, well, does Rio Tinto have to take responsibility for those emissions down the chain from its operations? And if so, how should it be managing them? Should it be reducing them in line with the climate goals of the Paris Agreement? And so that's how that process of working with shareholders to raise an issue, putting it on the agenda of a major company and then getting its shareholders to vote on it can lead to a massive demonstration of shareholder support or investor support for positive climate action. I have here a video on our shareholder action work by our shareholder action campaigner, Rachel. I'm hoping that the ability to share sound will have worked when I set it up earlier. So this will be a bit of a test run, but hopefully it works. And if not, I know there are subtitles on this video. So if it comes to that, you may just have to read along. All right. So I'm not sure if the sound came through there. It came through on my headphones, so I'm hoping that's a good sign. Um,
Didn't
but
come through on mine, but I
uh,
can't speak on behalf of everyone.
I I wouldn't trust my technical capabilities on that one. So apologies if you weren't getting sound on that. But yeah, that was a video from our shareholder action campaigner, Rachel. Basically, we know that there is a large, there are huge opportunities to drive corporate, um, uh, to drive climate action from corporate Australia, and we found a really effective way to do that is raising issues through the shareholder action program.